Stocks and bonds under significant pressure as hot inflation data and a weaker than expected bond auction have investors taking money off the table. Our next guest says the charts show there could be more downside ahead. Joining us now, Adam Turnquist, LPL Financial Chief Technical Strategist. Adam, thank you so much for being here. First of all, I guess let's just get your big picture take on the reaction that you're seeing in the market today to CPI data and whether the chart sort of showed that stocks have been in maybe a delicate position. I mean, we've been seeing some selling start to come more to the fore in the market over the past week or so.
Thanks, Julie. Great to be here. And in terms of the big picture, delicate is a good word because we were coming into today's inflation print right at an inflection point. And the level we've been watching technically here is the 20-day moving average on the S&P 500. If you look back since this rally started to accelerate, that 20-day moving average has been a consistent area where demand came in on these dips. We did break below that level last Thursday, had a bit of a relief rally on Friday, but we're well below that support level now. We're looking at that breakdown as kind of a warning shot for a deeper pullback here, especially when you look at some of the momentum oscillators rolling over into bearish territory. The big picture as well is that this really doesn't mean the bull market is over. It's due for a pullback. We're very overbought. And we think kind of a worst case scenario for the S&P 500, maybe get down to 4,800. That was the breakout level going back to those prior highs. Nothing out of the ordinary for a 5 to 6% type of, or 6 to 7% type of pullback within the context of a strong bull market.
And Adam, so to 4,800, is that your base case?
Base case, I don't think we'll get there actually, because there's been a large rotation going on in the market that's helped prop up market breadth. So this has been very broad in terms of the rally this year. It's not just a mega cap story. You look at materials, financials, energy, all breaking out to new highs. That's picked up some of the slack from some of the larger caps. And there's a lot of support below the market before you get to that 4,800 level. Maybe you get down to, call it the 5,000 point milestone, 49.50. There's some key support levels there. I think that buy the dip crowd will be welcome back around those levels.
Well, that might be your worst case, but I believe your target is around, what, 48.50, 49.50. That's lower than a lot of the sort of fundamental strategists on the street. So what are you seeing in the charts there that doesn't make you, I guess, as optimistic as that crowd?
So with our price target that was established and published back in December, the impressive 10% rally in Q1. So that's under review in terms of what we're expecting. We're looking at our earnings growth outlook. We had 235 penciled in for EPS this year. I think you can make the case that moves higher as well. So in terms of optimism, there's a lot going on in terms of this rotation and technical strength in the market. Earnings continue to do better than expected. And then when you step back and go to the big picture, look at the economy. We just added 300,000 new jobs last month. The employment picture has been pretty robust, manufacturing data coming back as well. So you have to ask yourself, how big of a drawdown can you really have if the economy remains resilient and really continues to do better than expected?
And Adam, looking at the 10-year here, so we're back at 4.56. Where do you think we head from there? What are the charts telling you?
So we're right at a key Fibonacci retracement level, right around 455. If we get through that level, you have 470, 480. But I think you could run all the way close to that 5% level if we get a little bit extended. And if you flash back to the summer of last year, markets were overbought. Yields broke out above 435. That was a major tipping point for risk appetite. We're getting that kind of same playbook right now. But when you go back, we had a pretty garden variety 10% correction last fall into those October lows. Market snapped right back. That's not our call for a correction at this point in time, but certainly watching some of these support levels and how well some of the leadership holds up at this point.
Adam, thanks so much. Really appreciate it.
Thanks for having me.
Take care.